Welcome to Dominant Trader Coaching Group Coaching Call. I'm Coach Kelvin. Today, we'll be speaking about trading rules. And the question would be, why trading rules? Why are they so essentially important to your trading strategy, to your daily trading plans, to your goals to take profit out of the market at will, to limit your exposure to the market? They're there when you're acting in your best interests. They're there when you want to make your goals a reality. They're there to protect you from danger. What is danger? Unforeseen things that could possibly happen that you're not aware of. It's danger. It hasn't shown up yet, hasn't affected you yet, but it could affect you. So what you do as a master trader, as a strategist in your portfolio, because your job, no matter how you look at it, you're a risk manager. Yes, you are. You risk manage. You manage your portfolio. You manage what comes in and what goes out of your business, because your trading is a business, and every business has an operational manual. So you can look at your trading rules as your operation manual for your business. Every business measure their cost, their expenses, and their profits. Every business, to maintain a business, must maintain an area where they're accumulating profits to take care of their overhead, to pay their employees, and to remain in business. So let's look at our trading rules as our operational manual for our business. Now, a few years ago, when I started trading, I wrote some trading rules for myself, and I've been modifying them as I've been trading. So I want to share them rules with you, share how they can help you and they can protect you when you are trading. So the question is, why trading rules? And this is Dominant Traders Coaching Rules of Engagements when you're trading. First thing I will say to you is, always know your maximum loss limit for any given day. Always have a profit target for any given day. And this is the rules for your account based on account size. If you have a 100K account or more, the maximum loss that you should guard yourself to not exceed is 1% of your account balance. That is your maximum loss for that trade, for that account. So what does that look like in the area of a 100K account? Well, we know 1% is $1,000. So if you hit a daily loss limit of $1,000, you should stop trading that account for that trading day. Not session, I said day. If you have a account size and it's below 25K, you should limit your account drawdown maximum to 2% of that account. So what is that? $400. Now you say, well, $500. You say, well, Kelvin, that's real low. It is, but it's there to protect you. So what that means is that you must be very studious when it comes to executing your trades, getting in and getting out of trades at any given time so that you can protect your account balance. Your account should be growing and not shrinking. Now, what does that mean, Kelvin? That means that I am going to be very selective at the accounts at the trades I'm going to take, for the reason that I'm only willing to lose so much of my account balance at the beginning of the day to accumulate the wealth that I have my goals set for this year. If I keep my loss small, then let my winners be bigger than my lost trades, my losing trades, then I will be accumulating a growing P&L on my account. Your job is to take money out of the market. You have a title of a risk manager. You're the strategist. You're the CEO of this company that you have your trading company. So if you have these rules in place, this will protect you where you can trade continuously and not do like most traders, burn out in 6 months or less and say the trading game doesn't work. It doesn't work because they do not have rules in place. My goal is to help you to establish your rules, to acknowledge your rules, and to abide by your rules. See, a disciplined trader has rules, has targets, has a plan, has a strategy for their trading, and they will not violate their rules no matter what, no matter how they feel, no matter what's going on around them. They understand the fact that their rules are there to protect them. DTC trading suggestions, and these are suggestions for you on how you can guide your day and guide your rules. So 1, have a profit goal for the day, week, or month. A goal is just this here. It's a plan. Put it this way, it's a dream that's written down on paper, and it has a steering mechanism in it. And that steering mechanism for this segment is your trading rules. So it says that I have these things in place that must happen over a period of time. So sometime in the future, I will reach that place or that goal that I planned for myself. If you don't have a goal, it's just a dream and it won't happen. So your goal is a written plan of your dream, and it holds you accountable for the things that you say that you really want. If you really want to have financial independence, if you really want to have freedom, if you really want to leave your job, if you really want to take your family on vacations 2 or 3 times a year, all expenses paid because of your trading, then therefore your goals must be adhered to or it will not become a reality. Next one is that you are not required to hit your goal every day. Contrary to contrary to public opinion, if you're a 50-50 trader, you have to understand the fact that 50% of your trades may fail. Doesn't mean that they will fail, but they may fail. So you're not the sum of your last losing trade. Because you're a disciplined trader, you have rules in place, you limit the amount of money that you expose to the market on any given day that draw your account down. You have profit target goals that you would, at places in the market, you would take and extract money from the market to continue building your P&L. So therefore, I am not required to hit my goal every day. But if I average hitting my goal 2 to 3 times a week, or 4 times a week, or 5 times a week in the 5 trading days, then my account balance will grow. The thing is this here, is that if I limit myself to a certain number of loss in any given day, and my profit goal is a return on investment 2 to 1, that means that for 10 of the trades I've taken, 5 were losses, and let's say it was $500 a day. Well, if I lose 5 trades, I lost $500. $2,500. Okay. If I won 5 of the trades with a 2 to 1 win ratio, I made $10,000. Subtract the $5,000 from the $10,000, I have a profit goal of $5,000. That is a 2 to 1 risk to reward. If you know your trading strategy, you have these things in place and you'll be able to take advantage of the opportunities the market gives you to make money at any given time. If you're coaching with Dominant Traders Coaching, you have a strategy, you have a plan, you have your automated trading strategy in place, and you know exactly where to get in the market, take profit out of the market, and limit your exposure to the market in the area of the term of risk. The thing that will protect you, we'll get to that later, I won't go one step ahead. The second thing is have a maximum trade limit. So what is that for you? What are your rules for your trading exposure? Because this is what I can tell you, and which is a certainty. The more you trade, the less you're going to make. Reason being, treat this trading business that you're in like Las Vegas. In this business, difference to Las Vegas is there are no trading rules. The only rule for trading is that you can trade as long as you have money to insert into the market. You can trade. No rules, no stops, no whatever that is that you don't need. There is nothing there. So you have to, as a business owner, put your rules together yourself, your operational manual for your business to limit your exposure to the market. So therefore, you have profit goals, projections on what your business is going to do on a daily, weekly, monthly, and annual basis. So know your daily maximum trade limit, because do you know that the more you trade, the more risk you expose yourself to the market. So limit your trades. The second thing I would say about this is that my suggestion for everyone is 5 trades per account. In this age of prop firms, we have many accounts, not just one account. We have 5, 10, 15, 20 accounts. No, some guy has 50 accounts. Well, what is the limit for your exposure to the market? My suggestion is 5. I think that's a healthy amount. If you're not executing 5 trades and not hitting your goal, then therefore I suggest you go back and trade simulation trades to adjust your strategy so that within 5 trades, you should be able to have winning trades and you should be able to hit or attain your daily goal for that day. Suggestion: any event that you trade and you go green for that day, you may not hit your goal, but I would suggest take any green that you get, keep it, and do not insert it back into the market. Meaning, case in point, if my goal is $500 per day, okay, $500 a day would give me an average of $5,000 a month. Okay. We know that 50-50 win ratio. Well, if that be the case, then if I lost my train of thought there. Oh, that was good too. Man, I'm getting older, guys. I'm getting older. I'm getting over. But if I have that strategy in place and I make $300 that day and not the $500, I'm going to stop trading. I'm going to keep the $300 because I know every day I leave the market green, I'm adding to my P&L and not subtracting. Some people will go back in and take that $300 gain and say, I need $200 more. Go to get the $200 and end up losing, because the more you trade, the more risk you take, and you're subject to have loss. So you go back in and get the $200, then you lose $100. You say, well, I got $200 left. Let me go try to get that $100 back, or get the $300. And then you find out at the end of the day, guys, I'm sharing this here, but this is my own life story. You end up $200 in the red. The pain that got so intolerable, you're mad with yourself and you stop trading. Well, you had a green day, you were up $300. Then you have a red day, you're down $200. That's a $500 price swing trying to get an extra $200, and it costs you $500. So never go back and reinsert your money back into the market. If the market gives you $100, accept it, be okay for that day. What you're looking to do is build a pattern of consistently taking money out of the market every day. Hitting your goal is not the main subject. Being green is the main subject matter. So being green is my objective, not my goal. My goal is just a plan that I have, but the plan don't have to work itself out for me to maintain my strategy. So if I go green, I'm done for the day for that account, if I'm personal account or if it's one of the prop firm accounts. My suggestion, limit yourself to 5 trades. Third would be have a maximum daily drawdown limit. That means that when you hit this limit, whether it's $100, $500, $1,000, $10,000, whatever it is, according to your account size, stop trading. 3 consecutive losses, stop trading for the day and review your trades. This is something I developed a long time ago. I thought this would be great to add this back in, because you must always act in your own best interest. What is that? Maintaining your rules and following your rules verbatim as you set them up. If your rules does not work for you, then go back and revise the rules so that you can be better at your trading performance on a daily basis. TLP. This is a new concept that we developed here at Dominant Traders Coaching, and that is time, level, and price. Time, level, and price. It's an acronym, TLP. What's the time? Where is the level? Is the price in the level? Take the trade. That gives you a visual acuity of what it is that you're looking for the highest probable trade. This right here, guys, can save you thousands of dollars when you're trading. The Dominant Traders Coaching, 5 pillars of strategy. This is for your day trades. 1, only enter trades at the top or bottom of the hour. These are rules, guys. Now, this is a high suggestion for you. This is going to give you a visual insight into what you're looking for before you execute any trade. You know exactly what a good trade looks like, and you take advantage of them as the market presents itself to you. The second thing is limit your trades to 5 trades per account. So if you're with a prop firm, if you have one account, that's an island by itself. You have 2 accounts, island by itself. Limit to 5 trades. This is what I suggest, guys. If you have a losing trade, stop trading right there. Immediately swing over to sim and take your next 2 trades on the simulated trade to practice that execution again. Because one thing I do know, there's endless opportunities in the market to take trades. You only want to take the trades that has the highest probability of giving you a favorable outcome. You can't tell the future, but you know how to place yourself in an area in the market where you have confluence. You have the different pillars in place for you to take your trades or refuse to take a trade. You know exactly what it looks like, especially if you're coaching with us at DTC. You know exactly what it's looking like, and therefore you can take advantage of it. Third thing, what I say to you, if you hit your daily loss limit, stop trading. This is a big challenge for traders that lack discipline. This is a big challenge for traders that don't have a clear vision of their future. This is a tough place for traders that do not journal. If I can say anything to the retail trader today, follow your rules. Do not negate them. Do not change them. Be consistently doing the same thing. We have this analogy, we say, rinse and repeat. Do the same thing over and over and over again. Remember, you're not the sum of your last trade. If you hit your daily profit goal, or come close to it, or come halfway to it, stop trading for the day. Your goal is to leave the market green every day of the week. So not only have green days, you have green weeks. And not only green weeks, you have green months. And not only green months, you have green quarters. Do you know what happens? Your reality, your dream becomes a reality. Remember, guys, you must eat elephants one bite at a time. You don't eat the whole elephant, you can't do it. But you can take one bite at a time. Remember this fact, guys. Inch by inch is a cinch. Mile by mile is hard. So don't try to do it all in one day. The 5th pillar that we have for you is if you have 3 consecutive losing trades in the trading day, consecutive means 1 loss, 1 loss, 1 loss. Stop trading. That is the suggestion for DTC coaching. This is what I believe will help you, save you thousands of dollars, and it will protect you. Only trade top and bottom of the hour. Limit your trades to 5 trades a day. Stop trading when you hit your loss limit. Stop trading when you hit your profit goal. Stop trading when you have 3 consecutive losses. Suggestion, if you have a loss, go to sim, trade a new trade, 2 trades there, then come back and trade live. What that does, guys, it breaks the psychological connection to that losing trade because you're at a disadvantage when it happens. And you don't want to be going into a trade not mentally connected to the possible win side of it, but you're hanging on to the losing side. You're still beating yourself up for losing money, and you can be in the place of revenge trading or rapid trading. That's a form of revenge trading, and you're getting right back in, getting right back in, getting right back in. And then the little paper cuts you get, because what's going to happen is instead of having the proper stop for the trade, you're going to start mitigating your stops by adjusting, making it real small. I'm only going to risk 1 point. I'm only going to risk 5 points. And you end up getting stopped out 5 times, and you lost more money if you would have just gotten the trade with the regular stop that your strategy's already worked out that works for you. So let's talk about why trading rules. Why trading rules? This is the golden rules of trading. Rule number 1, when you enter in a trade, only enter the trade in the direction of the trend. That means that if it's trending up, then only take long trades. If it's trending down, only take short trades. Do not be a reverse trend trader. It will cost you money. Hear me out. Your percentage of win will go higher and higher if you're trading with the trend of the higher time frames. Now, I trade 30-minute candles, and I predicate that off of my 1 hour, 4 hour, daily, and weekly candles. What's their trend? And I try to find that trend within my trading session, and it helps me stay green, guys. It's easier trading with multi-time frame continuity through. That's the strongest trades you can get in any trading day. So know what the trend is. Use your gauges for the trend. For my trend gauge, on a 30-minute candle, it is a 50 moving average. If I'm above the 50 moving average, I am bullish. If I'm below the 50 moving average, I am bearish. If I'm using wrinkle bars, my moving average is the 200 moving average. Above, bullish, below, bearish. I use these things not to tell me when to trade, but give me a good indication when is a good time to get in a trade and the possible direction to be trading in. What do we use here? We use on our charts, we use the 30-minute DEMA, on the 30-minute candle, 50 DEMA, 200 DEMA on the wrinkle. Above, bullish, below, bearish. Only enter a new trade when the price is moving in the same direction as the higher time frames trend. This makes a lot of sense when you're dealing with the top and bottom of the hour, only trading with the trend. Guys, I'm saying to you, your trading percentages of wins will go up dramatically if you limit the amount of trades you take. Be very selective on when you're going to trade. That means you're going to trade top and bottom of the hours, and you're only going to trade in the direction of the trend. And make sure you trade. My suggestion is, I love trading open. People say don't trade the open, but at DTC Coaching, we teach you how to trade the open. Okay. If you're not done trading and meet your profit target within 90 minutes of the market starting, then I suggest you stop trading, close your computer, go outside, walk in the grass, go to the store, go have lunch, go have breakfast, break the cycle, whatever that is, then come back at the second half of the day and continue trading. And that is the second trading session of the day, but stay out the middle. Like I said, don't diddle in the middle. That's where the chop, and that's where you end up giving all your gains back. So this means that both daily and hourly charts must be trending in the same direction in order to initiate a new trade. That is the rule for entering a trade, okay? So if you have multi-time frame continuity, that's your highest percentage taking trades. What that means that, guys, you're going to take less trades. You're going to have less opportunities. But that is your friend. That is you acting in your own best interest. Second rule will be for you. Only trade, not the only trade, the 1 hour daily range. I use the daily range to depict my direction of market trend, RW, and chop. So we use the DR, IDR here at DTC Coaching to help us understand where price is possibly going to be going at for that day. So if price cannot break out the daily range or the 1 hour orb in the first hour of trading, then we're going to understand that we're going to have a sideways market, a consolidated market for that day. We can pretty much say, I am not going to trade in this time frame. I'm going to wait till we break out the daily range. And what that looks like, it looks something like this. We have a daily range indicator sitting there. It tells us what the market range is for that morning. And we have an area of imbalance. And we look for the market to break out of the imbalance into a breakout session above our goal line, top or bottom, and give us a directional bias on whether the market will run or consolidate for the rest of the day. There's more to that training there, but if you want to know more about it, go to dominantcoaching.com and check it out there. We have good information on it. Okay. After the 1 hour orb, the directional orb comes in place. This is the synopsis how you operate it. If the price cannot break out of the daily range after the first hour, in the trading sessions, you have two things you got to do. One, there's a high probability of chop during the first half of the trading day. That means that if you don't see it breaking out of there in the first 90 minutes of trading, walk away. That's all it's telling you. Get away from the market. It is not in your best interest to be here trying to trade it. Turn off the computer. Walk away. Take a break. Come back later. This is not your time. Next, I will say check the market again during the second half of the trading session. What is that? Well, for me, it is on the East Coast. It is 1, 2, or 3 o'clock. West Coast, it is 10, 11, or 12 o'clock. Top or bottom of the hour. I find that I have the greatest advantages get in trades around them trading periods than I can do any other time of trading. It limits the amount of trades I can take. It limits my look into the market. And I do this here consistently. We call it rinse and repeat. And guys, it makes me a profitable trader. It will make you a profitable trader because you limit the amount of trades you take in any given day. You're only looking for the best opportunity, the highest probability of things will work out in your favor. Third, if the price has not broken out of the morning 1 hour orb or is not near a major area of support resistance, turn off the computer. That's it, guys. This is designed to protect you. This is a rule. And take a picture, screenshot. If you use this consistently, you will make money. I can't guarantee you'll make money, but I tell you this here, you have a good insight into what your strategy looks like because all this we're speaking about is strategy. One of the things that I really like to do in my trading, I'm a heavy MACD user. So we have this customized MACD here at Dominant Traders Coaching that has like 12 indicators built into it. Really works really well to give you a directional bias about the market. So this is the third rule here. Check your MACD. Is it in alignment with the direction you're trying to trade in? Is it in a place where you can take advantage of what the market is or is not doing? So this is how we check out our MACD. Check the Bollinger Bands on our MACD to see if they're tightening or expanding. We have a Bollinger Band built into our MACD. Next, has the RSM band moved out of the Bollinger Bands? Are they bright green, bright red? You know the dots there. Is it at a 45-degree angle or 135-degree angle the other direction, showing high volume, or flat at a 90-degree angle, going straight across? These things will help you decide whether or not there's enough volume driving this move to take a trade or not take the trade. This is an added edge. It's not your decision maker, but it's something that you can use to guide your trades and when you're doing it. Preferred time frame is the 5-minute time frame. I do have it set up on a 2-minute time frame to give me an early warning system, my canary in the coal mine, my Will Robinson, danger, danger. Tell me something that's going to happen, possibly going to happen. I see it brewing early on, then I'll switch about 5 minutes to make a decision whether or not I'm going to take a trade or not based on my MACD indicator. Okay, rule number 4, when to take a new trade. Only take the new trade, the top, bottom of the hour, 0 or 30 minutes. You come into the market, check 5 minutes. Here's this out. 5 minutes before the change of the hour and take a look. Boom. And you take a snapshot. If it's not in a TLP, guess what? Walk away. Just that simple. You don't have to stay there for 25 more minutes. Just walk away, close the computer back, come back at 5 minutes before the bottom of the hour and take a look. Snapshot. Is it there? Nope. Walk away. This will keep you out so many trouble, guys. I'm telling you, it has saved me countless times. And I just don't set the computer all day. I just come back 5 minutes before the hour. I check my computer. And in fact, I was talking to one of my traders. They have an alarm set at 25 after or 55 before, 55 minutes after. They have an alarm going, check the computer. And then look, and guess what it does? Cuts down on anxiety. It cuts down on you finding trades that does not exist. It makes things better for you. Now, this rule does not apply if you're trading breakouts. There's times you hit certain areas of confluence and you take that trade because it is presenting itself right then and there. That's that's an exception to the rule. All rules are made to be adjusted, but you have to strongly be able to justify why you make a decision to break your rule. Fourth rule coming up. Best time to look for a trade. Wait for breakouts. This happens high percent of the time at the top and bottom of the hour. So most times you're going to be in line with the breakout because it happens around the cycle that you're looking for trades. That's the advantage of taking and maintaining the golden rules, because I'm only looking for trades when the time breakouts happen. Most times they're going to be at these hours right here in front of you. Now, rule number 5, how to enter a trade. Multi-time, I think I've doubled this up. All right, multi-time frame continuity on the lower time frame. From the lower time frame to the higher time frame, that is. Use the 2 or 3 minute candle for 2 up, 2 down. This is a strat principle. 2 up means that it took the high out of the previous candle. That's a 2 up. Or it took the low out of the previous candle. That's the indication it's going lower. Looking for a 3-bar combination, okay, in the same direction that tells you that the trade is moving in that direction is a possible good entry because volume is picking up into the trade. If there's no volume, it's going to go up, 2 down, 2 up, 2 down, and we call that chop. So this is when you're into the trade. Look to the lowest time frame. I prefer the 2 minute to see when the momentum is coming in and take the trade. That's how I do it, and it tends to work out pretty good most times. Now, have an entry or exit, take profit, plan established before entering in the trade. So guys, plan your trade before you take the trade, so there's no moving stops around things for you to know exactly when you get in, where you're going to place your stop that's necessary for the trade, where you're going to take profit at, and do not move your targets. Okay, do not move your targets. Take your gain, pay yourself out the market. And I sell 90% of my trade at the first target. Boom. And then the second, I let it run 50-50 on that one. But definitely pay yourself. Have a trading strategy for your trade. Plan it. And most of all, never trade without a stop loss. Never trade without a stop loss. Never trade without a stop loss. New rule. Never re-enter the same trade after exiting with profit. Okay, say it one more time. Never enter the same trade without exiting with profit. Why is that? We just spoke about it. You're trying to hit your goal. You got a profitable trade. It looks like it's going to run. And when you get back in that trade, you're going to do this thing here, guys. And I know I've done it many times. Well, I'm going to get back in, but I'm only going to risk 2 points. Well, that 2 points took you down $60, $100, $50 or $100, and then you're going to say, well, let me get that $100 back. It's going to eat away at your gain. Don't do it, guys. Just stay out the trade. You made green, stay green, and leave the trade. When I talk to you at the end of the day, I say, would you green or red? I'm green. That's all I want to hear. Not how much you're green, but I'm green. If I hear that you green every day for a whole month, man, I ain't have to even ask you. I know your portfolio is growing, but some days it's 500, some days it's 5,000. I don't know your trading style or your account size, but I do know this here. It will work for you. It will work for you. All right. This applies mostly to swing trades, and also it applies to your day trades. These rules, when used together, can severely limit your trading opportunities, but it also increases your win rate. Look, guys, put it this way here. $200 a day will give you $50,000 a year. $300 a day will give you $75,000 a year. $500 a day will give you $126,000. Do you see this, right, guys? Just maintain the $200. Take it. The $300, take it. The $500, take it. You're going to end up somewhere around $100 grand at the end of the year if you consistently doing the things that we're teaching right here in this teaching here. I know you guys can do it. I know you have it. You have everything in you to be a successful trader. It is truly, truly, truly up to you to do whatever is necessary for you to do. And most importantly, guys, here I'll say this here. The most important thing I say to you is this. Review and log all your trades. let's make this a green day. Let's make this a green day every day. First of all, I will say this to you. You got this here. I am Coach Kelvin with Dominant Traders Coaching. If you want to know more about our coaching, go to dominantcoaching.com and you'll find the information there. I will speak with you guys later.